The bank is looking at your capacity. They're essentially looking at your income minus your expenses, and that equals your borrowing capacity. But there are a few things that come into play along the way. Your income, maybe you're self-employed, casual, have Centrelink payments. Not every bank is going to take all of those types of income. Maybe you've got high credit card limits or HECS debt, or maybe you pay child support. Some of those expenses are going to come into play more so than others. And then you've got the repayments on the loan. Not only are they assessing your ability to repay the current interest rate payments, but what if we add a buffer to that? What if interest rates continue to rise? We need to make sure that you're going to be able to afford this loan. So they add a buffer of 2.5%, 3% to your rate and see if you can afford those repayments. So income minus expenses equals borrowing capacity, but with little asterisks along the way to make sure that the bank's policy fits within your capacity for what they want to lend you, what they're happy to accept. Pre-approvals are really important because of all of this. A good pre-approval will lock in your borrowing capacity for 90 days. So if interest rates continue to rise and your capacity will go down with those interest rate rises, your capacity is locked in. You don't have to worry about, well, the rates have increased by another 25 basis points. I'm going to lose some borrowing capacity. I need to search for a cheaper house or contribute a larger deposit. No, pre-approval will lock that in. You are okay for as long as that pre-approval is valid, which is typically 90 days. Not all pre-approvals do this. Some say, yes, you're pre-approved, we're happy, but any change to policy, any change to interest rates, we're going to reassess where you stand. So you want a good pre-approval that's fully assessed. That's what we call the term, fully assessed, and is locking in your capacity for 90 days. The last thing I wanted to mention about that is that you can renew a pre-approval after 90 days expires if you haven't found a property, but typically you'll just be reassessed at whatever interest rates and policies are applicable at that time. So the pre-approval is in place for 90 days. If you don't find a property, that's okay, but you're reassessed at whatever is the environment at that point in time. If that's worse, your capacity drops. If it's better, your capacity increases. It needs to be reassessed. There are several different benefits when purchasing your first home, and I want to throw to this example here to show you how they impact your capacity and what deposits required and therefore what income's required to borrow the remaining loan. We've got an example here. This is for a Victorian purchase, $600,000, and you can see that we've got some costs we need to cover when we're purchasing. There's some bank charges, a conveyances fee or solicitor, stamp duty, and other government fees. We want to account for all of these, which means before we're even starting to cover the purchase price, we have about $35,000, $36,000 we need to cover. The bank is also not going to lend 106% of what the property is worth, maximum of 95%. And that is with the home guarantee scheme. Now, if we're accounting for all of this stamp duty, we need nearly $66,000. So the home guarantee scheme essentially says, okay, you can provide a 5% deposit and we're going to waive mortgage insurance on this purchase. So if we add that little button here and we add our $65,630 as a deposit, you can see that we've got no mortgage insurance here. But if I were to untick that, we would have an additional $30,000 in mortgage insurance that we would have to pay. It essentially works like a guarantor, which we talk about in a different video, but that's the benefit of the home guarantee scheme. It adds a security, which whilst you are borrowing at 95%, it kind of looks like it's at 80%. And when you're at 80%, there's no mortgage insurance. So the home guarantee scheme is fantastic for that. Second benefit, and one of the biggest ones, is a stamp duty concession. Now, any purchase price up to $600,000 at the moment in Victoria is a complete stamp duty waiver, which is why I've used 600 here. So when we tick this little box, our stamp duty drops to 0. And now, if we're trying to figure out what deposit we need for 95%, we only need $35,000. So you can use these two in conjunction. You can use a stamp duty concession, you can use the home guarantee scheme, and you can see that we're under the 95% maximum loan to value ratio. We've got all of our costs covered, got the 5% ready to go, and that's a lot cheaper than having to purchase when stamp duty is applicable. So it's much easier for first home buyers to get into the market. There is another tweak when we've got construction, which I'll talk about in the next section. But if the property is brand new, doesn't even have to be being built. If it's brand new, never lived in, then right now there's also $10,000 that you can use towards the deposit. And that can simply reduce the loan amount that you've got there. So there are several concessions, there are several benefits of being a first home buyer. And that's what's really fantastic about getting first home buyers into the market, because it's much easier than buying a new home or buying an investment property. Now, some lenders are offering cashback for first home buyers, but not in conjunction with this guarantee scheme. So if you happened to have quite a large deposit, an additional $80,000 would be $125,000. Don't worry about the category, but if you had enough deposit to get down to 80%, then maybe we can look at some different lenders. Maybe they've got different benefits for you as a first home buyer than needing to use the government guarantee scheme. Because the government guarantee scheme isn't available through all lenders. It does have some restrictions, which I won't talk about because they do change over time. But that's something that you also need to consider. Now, when first home buyers are looking at how much of a deposit they need to contribute, like I said, the scheme does have some requirements around that, not how much retained savings you have. But if we're looking at some repayments here for a second, this here, 6.2% is currently where interest rates are sitting, roughly. And so for every $10,000 that you contribute, you're going to be saving about $60 worth of repayments. And so that's something that you would want to think about. You might want to contribute as much money as you possibly can, but how long is it going to take you to save that additional $10,000 versus what's happening with the property market? Will you spending an extra 2 months, 6 months, 12 months saving that $10,000? Will that actually be beneficial for you just to save the $61, $62? And do you actually need to save the additional $10,000, or do you have enough as it stands now to proceed with the purchase? Construction is a little bit different to buying an established property or an existing property that has been lived in. Off the plan, you'll still get a first home owner's grant because it's brand new, and stamp duty concessions can change. But with construction, we're looking at the land value when we're calculating stamp duty. So rather than needing to have the whole construction price, the land and the build at $600, only the land needs to stick to that $600,000 limit. Right now, the government guarantee scheme has a $950,000 limit for metro in Victoria. Regional, some places in regional are a little bit different, but let's just use this as an example. So you can do a total build price for $950,000, and you are then eligible for that $10,000 grant as well. And we need to make sure that we've got our 95% loan to value ratio, which means we need an additional $43,000 in savings. Now, as you can imagine, if we were using a $950,000 value on an existing property, we're gonna have a lot of stamp duty to cover. So construction is a great way to avoid stamp duty and get an additional deposit. I'm going to show the repayments on a construction loan next, but one thing that I do always like to highlight with construction is that it doesn't always get you a better deal. Yes, you get a brand new house and home warranty, and you can, have a lower deposit for the type of property that you end up with, but the costs that you've got during construction are much higher. You don't get to move into the house straight away. You have to wait for it to be built. And so you're paying rent while you wait, or regular living costs if you don't rent right now. You've also got the loan repayments when you draw down the loan, because you have to pay for the block when the block settles, and then you pay for the build in stages, which we'll go through soon. So that $10,000 grant, yes, it gets you the property, but that money is eaten up so quickly in terms of reduced cash flow. Not all builders account for flooring outside of wet areas, or curtains, driveways, landscaping, fencing. There are so many other little bits and pieces that you need to account for when building. This is just to get you in the door. It just gets you the property much easier than if you were buying an established property. It just reduces the deposit requirement. And so if we go to our construction example over here, let's use 6.2 for now. We've got a valuation of $950,000, the total build price. And when we're settling, let's just say for argument's sake that we are borrowing $902,000, and we are keeping the balance $303,000 for the build, and we're using the full $600,000 that we've got for that land purchase. Wouldn't normally be like this, but this is just an example to show you. Now, you've got interest-only repayments when that land settles. So you don't have a house yet, you've got the block, but you have repayments every single month of $3,100. And then as the build progresses, they lay the slab, and your repayments are going to go up because you've got a higher loan amount. You've borrowed the land, the 600, and you've borrowed the additional portion that's required to pay for the slab. It increases again when they pay for the frame, repayment goes up, so on, so forth, until you get to the final stage where instead of being interest only, it changes to principal and interest. Some banks don't do that, as soon as completion goes through, as soon as you get the keys. Some will keep it interest only for a little bit longer. But you can see that the repayments increase as the build progresses. And so this is really important to factor in when you're building, because if you have a lease expiring at a certain period of time, if cash flow won't allow for rental expenses and those certain repayments, we've got to put some kind of plan in place to make sure that everything is going to work. So construction works a little bit differently to buy an established property. I mentioned earlier that not all lenders are part of the home guarantee scheme, only a few are, which means that your options are very limited if you need that scheme when purchasing your first home. But this is a great example of why brokers are so important in particular, because finding the right bank is not just, do I have the right deposit and the right income, but it's, will they actually be able to assist me with what I'm looking to do with this type of property in this area? Do they have the type of product that I'm after? And so I've got an example here that you might have seen me remove earlier of the difference in interest rates. So just a 10 basis point difference here. And you can see that that plays about a $37 difference in the repayment each month. So getting a good rate is definitely important, but what if this rate here didn't account for an offset facility and you really, really wanted an offset, and your offset facility is going to save you more than that $37 a month difference? What if you wanted to fix your interest rate and the bank that might offer a low variable has a really high fixed rate, or vice versa? So you want to take into consideration, you want your broker to take into consideration what's important to you and what your plans are for the next several years, because the product and the features that they have are really, really important. Not only will this interest rate impact your repayments each month, but obviously with a higher repayment, your capacity is going to drop as well. So whilst a lender might have a better feature, maybe their rate is higher and therefore you can't borrow as much. And so you might say, you know what, I'm happy to forego that feature, that offset account, for argument's sake, that fixed rate, because I really need to purchase for a higher amount. I need 4 bedrooms instead of 3 for my kids, whatever it may be. You've got to work out what is going to suit your lifestyle best, and the broker needs to figure out what is going to work to achieve that goal. How do we get you the best loan? Product, interest rate, capacity, everything needs to fit together nicely so that you end up with the perfect loan. I'm a little bit biased, obviously, being a broker myself, but I think we're so important when it comes to making sure that clients and people in general know what they're getting into when it comes to their home loan. You're going to have this thing for a very long time. You want it to be the right fit for you, not just the interest rate, but the policy, the product features, all of those things need to align with what you're looking to achieve now, 5 years, 10 years time. Other professionals that are really, really important when it comes to purchasing are a conveyancer or a solicitor, because they will review a contract before you sign on the dotted line. Does it match the term that you wanted, 30 days, 60 days, 90 days? Does it have the conditions that you wanted, a building and pest inspection, finance clause? Does it have some conditions or terms that you weren't aware of? Maybe there's an easement at the back of the property which restricts building a shed. Maybe it has some general conditions that say if you delay settlement even by a day, you're going to be penalized several $100s rather than tens. All of these little things the conveyancer will look for and let you know what you're getting into before you sign on the dotted line. So important. It's understating what else they do. But building and pest inspectors are another one. They will make sure that if you're going to go ahead with this purchase, that there is a water leak here, that maybe there's some mold damage here, that this tile is cracked, which is letting a draft in. And so all of these things you might need to repair, not now, maybe in future, but they'll let you know what is going on with the property so you know what you're getting into before you sign. So like I said, surrounding yourself with professionals is just so important to make sure that you are making the most informed decision you possibly can. And so again, being biased, being a broker, I would love to have a chat with you and make sure that you're aware of what you're getting into, show you what your capacity is, show you what the different lender options are, and make sure that it's the perfect fit for you.